Hi, everyone. I'm so excited to be here today with a couple amazing people to chat about a really cool topic. But just to get us started, I'm Liz Barletta. I am a real estate attorney with the Barletta team at Ligris and Associates.
Hey everyone, my name is Chris Nadeau. I'm a mortgage lender with Mortgage Equity Partners, license 49077.
And here's Sabrina Stewart. I work with Keller Williams Realty. And today I wanted to talk about selling and buying at the same time. The reason why I chose this topic was because I'm coming across a lot of folks that want to do this process of buying and selling and buying at the same time. And for us, the path is clear and we know what to do and we know that everything is going to be okay. But for most people, this is the first time that they're doing this and they have a lot of fears. They feel very overwhelmed. So I hope that the information that we're going to share here is going to help them, to clarify some of the questions and maybe, get their mind at ease.
Yeah, absolutely. It is definitely one of a lot of people's fears out there. Like, how is this even possible? So, Sabrina, maybe you can kind of chat about the sort of the beginning process. How do we do it? Do we put the property on the market first, their current home? Do we go shopping for a new home? What should we do first?
Great question. I think both ways would work, to be honest. However, due to the craziness that is this market right now, I always suggest putting the house on the market first, securing an offer, and then looking for a house. And the reason is, very often we put our properties on the market for our sellers and we receive multiple offers. We have a very low inventory right now and high demand. And when we receive the offers, we're not going to be only choosing the highest one, but the ones that the buyers is flexible with timing. And because this is important for the seller, they need to have time to sell their property and then look for something else.
Mm-hmm.
Of course, on the listing on MLS, we always include a disclosure saying that the sale of the house is subject to seller finding a suitable house. And so the buyers that are going to come to the open house, they are already aware of that. And
they're prepared.
They propose that they're flexible on time, and that's the people that we want to have our offer accepted with. And then we can, once we have that offer accepted, we can look for properties. We can go to open houses, and when we put the offer in a property, we're already going to say that we have an offer accepted for our listing, and that will make the seller a lot more comfortable to accept our offer. Mm-hmm. If we come with an offer saying that, oh, it's contingent on the selling our house, the house is not on the market yet, it kind of gets challenging, because of course that seller is also receiving multiple offers. And between our offer with that contingency and many others, they're probably going to choose someone else.
Mm-hmm.
If that makes sense.
Yeah, that makes total sense. I think it makes it more powerful on both sides. You can come with something like that next seller actually has some comfort knowing that you've got a solid buyer, you're accepted, you're under contract, but then gives by putting that as a disclosure out there when you're listing your property, you're going to get those buyers who are going to have the flexibility, which is amazing. So that makes a lot of sense.
So Liz, I know that we have a lot of tools. We have our strategy to buy time for that seller. What do you think? Putting a general contingency on the purchase and sale agreement, or doing a use and occupancy agreement? Can you explain a little bit about the tools that we have available?
Definitely. So depending, obviously, every deal is unique. Every seller, every buyer is unique. So there are a couple of ways that we can handle this. If you are selling your property and you are going to accept one of those offers, there's two options that we can do. We can do either a straight up contingency. That means if the deal falls through, you have the ability to basically terminate the transaction. The other option is a use and occupancy, and basically it's kind of like a lease back. You're asking the new buyers to let you stay in the property. Mm-hmm. so depending on, and usually it depends on, you know, what the negotiation is. Oftentimes buyers find that if you maybe compensate them for that time, but if it's a really hot market and there's a ton of offers, maybe you don't have to necessarily ask to cover their costs, so for you to stay. So that way, depending on, again, who the buyer is, some buyers would say, well, let's make I'd rather just have a contingency. So if for some reason you can't find suitable housing, the seller can terminate and the deal's done. Whereas and not have any person staying in the home while you're the new owner. Some people don't care about that. And they say, you know what, I'd rather close, know that this is my house eventually, and let the seller stay. So it really depends on who the buyer is. And that's why it's such a great thing that, you know, that hopefully people out there hire you, because you take that effort to talk to the other side and say, hey, what does your client prefer? And then you can maybe tailor that counter offer based off of that sort of scenario. What's the most comfort level with both the buyer and the seller? So, and that same token, when you are then identifying a property to buy, in your offer, you can also make it contingent, even though it is more comfort for the new seller, that there's going to be a contingency, but it's based off of a property that's already under agreement. I still recommend, if the seller will accept it, having a condition in there, because you do just have a situation where you don't necessarily always know that it's going to close. Things can pop up. Hopefully they don't. But at the same time, I'd rather have that protection just in case the deal ends up having to be terminated. But like you said, if you have an offer submitted that has a contingency, that already has a property under agreement, that's going to be way stronger than the other people who are submitting offers that haven't even started their sale process.
Correct.
Yeah.
Yeah, I had both cases. I had last year, in the beginning of the year, I sold a property. The family was downsizing, and they thought it was impossible, like that they would sell the house and buy something else at the same time. And they're like, you're crazy. You always feel so confident that we're going to get this done, but I don't think so. And I was like, just trust the process, trust the process. And we found a buyer for their home that allowed them to stay for 60 days for free with a use and occupancy agreement. And that was plenty of time. We actually ended up only using 30 days for that contract. And they're really happy. They found a property in New Hampshire. And I have cases where the seller agrees to pay what is called the PITI. Chris, do you want to tell us a little bit what that is?
Sure, that's just an acronym for principal, interest, taxes, and insurance. So it's the full month's payment. It gives the buyers of the new property an incentive to let the sellers stay in the home. And that 60-day mark that you mentioned, that's key. Most people are buying homes that are owner-occupied units, and for it to be legally considered owner-occupied, you have to take occupancy within 60 days. So kind of as Liz was saying with protections before, maybe if the seller is searching for a home and they haven't found it yet, you could put in there a clause where the seller can stay up till X date as long as within the 60 days, and then they're forced to be out. So the underwriting, the lender for the buyers know that it really will be, they really will be moving in within 60 days.
Yeah. And that also gives incentive to the other party to obviously to be legally compliant, but also for them to know that there's going to be an end game, that it's not just going to be that the seller's going to be there for like a year or 6 months, right, or you know what I mean? So it's for them to be able to plan. And like you said, Sabrina, the majority of the time, that is plenty of time to find a property, identify it, and close within that time frame.
Without a doubt.
Yeah.
And Chris, I know that in some cases, the seller doesn't even need to necessarily sell the house to be able to purchase. Of course, they want to sell, but they don't need to get rid of that house to be able to be pre-approved for their next purchase.
So this is really the ideal scenario for the buyers. Basically, you have a home, there's equity in it. You want to use that equity towards the purchase of your new home. But you don't want to, ideally, you'd like to be able to close on the new house and have a month to move out of your old house or whatever it is and not have everything in the U-Haul. So if financially you can afford it based on your income, you can purchase the new home with a low down payment loan. Once your existing home sells, you can take the equity and apply that against the principal on the new home. And let's say you're putting, I don't know, 100,000 against it. Your rate that you have and the term that you have when you close, those stay the same, but you can get your payment re-amortized. Some lenders will charge a couple $100 to do this, but it's way cheaper than refinancing. And there's no paperwork involved except for maybe filling out a form, and you can instantly have your payment reduced to exactly what it would be if you had to put that money down in the first place. If you take a low down payment loan and you have PMI and then you put enough money down, so there's 20% equity, the PMI also immediately falls away. And you can do this a month or two after closing.
Awesome.
That's me.
And to find that out, if like this scenario is possible, what is the process for that?
Talk to me.
Call Chris.
You need to be pre-approved, and I would set it up. I would look at it just as I would any other approval, what for someone buying a home. And all we're doing is carrying the debt of your existing mortgage. We're just making sure that financially you make enough money to purchase the new home and carry the existing home. In this market, we had lots and lots and lots of people do this last year, a ton of people, because it was, like you said, in a hot market like this, the sellers want the loan, the offer with the least amount of strings attached to it.
Mm-hmm.
Yeah, that's going to definitely be the most powerful one. And Chris, is that, obviously you do this type of re-amortizing. Does every lender?
Yes.
Yeah.
As far as I know,
Okay.
I won't say 100%, but I've never heard of a lender not doing it. So like I said, some will do it for free. Some may charge $300, $400, $500 to do it. Some have a minimum where it has to be 10% of the balance. Some let you do it once a year. Some do it only allow you once in a lifetime. But no matter what the rules are, I've never heard of any mortgage servicer not allowing this to happen.
Awesome.
Now they want a significant amount of money. Usually I would say 10% is the rule of thumb. You know, you can't just send in $5,000 and get your payment reduced.
Right. Awesome. You learn something new every day. I feel like maybe it's just the inexperience of a lot of, not every lender is created equal, as we know. And I feel like some people are told, oh, you have to refinance, and people don't necessarily want to go through the closing costs or things like that. Or maybe they have a better rate now and the rates have gone up and they don't want to refinance to be able to put that down. So, who you work with matters. And that's, a big takeaway, I think.
Yeah, I've been doing this for almost 20 years and I've learned to think outside of the box a long, long time ago. And this is just, it's like Sabrina said, there's multiple tools and every single situation is different. I've never done two loans that are exactly the same. Everything has its own parameters, and this is an amazing option if people qualify for it. And I know a lot of people will also think that you can't do 5% down, that you have to have a large down payment. One of the things that has worked amazing with Sabrina and I is she'll put in an offer and then she'll let me know when the offer goes in, and I personally call the listing agent to advocate on the buyer's behalf. And in underwriting, it doesn't make a difference whether the person puts 5% down or 50% down. It's the same documentation, it's the same everything. It still comes down to your credit, your assets, and your debt to income ratio. So whether your loan is, you put in 50,000, you're borrowing 50 grand on $1 million house, or you're borrowing 950, it's all the same as far as we're concerned.
Yeah. And actually, maybe Sabrina, if I could just, I think, expand a little bit more on what a use and occupancy is for the viewers out there, because I think it's just a term that nobody really ever hears about unless it's in a situation like this. So basically, a use and occupancy agreement is kind of like a lease. I think I mentioned it like that, but it's not a lease. A lease implies that you have a landlord-tenant relationship with the parties, where a use and occupancy excludes that. So it's just a contractual agreement. It's not establishing any kind of rights and responsibilities for other parties. It is important for you to potentially get maybe some insurance, especially if you're going to be, you as a seller are no longer the owner of the property, but you're going to be living there for 60 days or less. Talk to your insurance agent to see if you can get basically like a renter's policy for that period of time. That's something that's really important, because that's like gap, God forbid something happens.
Right.
But yeah, it's essentially an agreement between buyer and seller for funds or not. Usually, to make the buyers feel comfortable, they will ask for some kind of security to be held back. So if for some reason there's like damage made when you leave the property, there would be like that security agreement, security deposit, to be able to cover any of those costs. And so all of those little things are kind of included in that use and occupancy agreement, where we'll give that flexibility to you, but give the buyer the sense that they are protected as well, since there is something written. It's not just like a verbal, I'm going to stay in your new house for 45 days. It's something written by the attorneys and explained to them.
We also do 2 final walkthrough. Once we close, and if the sellers is still staying there for 30 days or 60 days before they move out, we're going with the buyer. If I'm representing the buyer, I'll go with the buyer and do a second final walkthrough. And that's where the funds that are held in escrow account, comes in handy if we find something damaged in the property.
Exactly. So there's always that sense of comfort, and especially with those types of those types of documents, people are very reasonable with each other, because at the end of the day, you want it to be a positive experience for both sides. And so everybody kind of works through what's reasonable. And if there is damage when you're living there, you just know that you got to fix it, just as if the closing hadn't happened yet. So, but yeah, it's definitely such a powerful tool in this market.
So Liz, how do you handle like 2 closings at the same time? Is there any difference?
So besides stress, no, we try to make it as stress-free as possible. So ideally it would be nice if there was more flexibility to be able to maybe close on, like in a situation that Chris was talking about, where you're not having to sell in order to buy and just carrying the 2 properties. That's obviously ideal, because then you can have a week or 2 weeks to be able to like stagger the closings to make things a little bit easier on the move. But that's just not the reality these days. And so I have plenty of buyers slash sellers that are selling in the morning, buying in the afternoon. And what we generally do is we will prepare all of the documents for the sale in anticipation, sort of pre-closing, a couple weeks before. We'll have the seller, notarize them. We'll have everything basically done for the documentation on the sale. And then myself or one of my teammates will attend that closing on the seller's behalf through what's called a power of attorney. So that way the seller doesn't have to be driving to 2 different places. They do all the seller piece beforehand. We always ask the buyer's attorney for that sale to try and conduct the sale, the closing as early in the day as possible. So that way it gives us the opportunity to be able to get recorded and then get the funds for the purchase. So in Massachusetts, in order for you to get paid as a seller, the documents actually need to be registered with the county at the Registry of Deeds. So that process nowadays is almost all virtual. It's an online queue system where you submit your documents and kind of wait until the whoever at the clerk's office actually takes them and processes them. So that's why it's so important in scheduling and having a team that does this often, to try and get that buyer's attorney to, again, maybe schedule the closing for the sale at 9 a.m. My team will get there, we'll sign everything on your behalf. They'll submit the documents to a record. Then as soon as the recording happens, that buyer's attorney will wire what you're making, all that money that's being made, and they'll wire it directly to my client funds account. That way we have the money ready to go. So as soon as we sign with you in the afternoon, we'll already have, hopefully, so long as the timing works with the Registry of Deeds and the wiring, of the bank will have all the funds needed for the actual purchase. If you're making more money than you need, we'll give you a check back at closing, which is always fun for clients when they can walk away after they bought their new home. But if you need to bring more money, you just bring a certified check for that, or you send another wire for whatever the balance is needed. But yes, not necessarily the most stress-free, but we try and make it that way by eliminating all the work on the first closing. So on the sale closing, taking it off your plate and putting it on ours. And then you can just show up to our office in the afternoon. Hopefully everything's there. All the recordings are happening and the funds are there. And then we can go to record. Because we're in Massachusetts, and unfortunately things are a little bit more complicated in our state as it relates to real estate, without the recording happening, you can't move in. Unless you have an agreement, like we were talking about, like a use and occupancy for the seller of your new home to let you in. So that's why I always discourage Friday closings or closings on the end of the month, because those are the busiest days. Fridays are the busiest days. And if for some reason we don't make it to record, you're waiting until Monday. So a seller does not have to let you move in even after you sign the documents. The documents need to be recorded. So keeping that in mind, I always talk to clients to have a backup plan. What's your backup plan just in case? Do you have some family to stay with? Can you go to a hotel? Do you have a pod, or do you have a truck? Talk to your movers about pricing. I kind of, I'm always this type of person is hopefully everything works out and we get to record and there's no sort of in between time needed, but it's better to, plan and not need it than not having even thought about it at all. Does that make sense?
Yeah.
Yeah.
Chris and I, we had our last transaction being one of those that needed use and occupancy agreement.
Mm-hmm.
We've done this in the past with Liz as well, and we have experience in doing that, and I think our clients just need to have the confidence on us and trust the process. It seems like it's overwhelming, and it sometimes feels impossible, but we get it done.
We get it done.
And we do everything we can to explain everything in the beginning and set your expectations so we minimize the surprises. No one likes surprises in this, and we don't want surprises. We would rather tell you upfront how it's going to work, everything that we need, and let's iron out all the speed bumps in the beginning so that when you are under contract, it's as smooth as possible.
Yeah.
And Chris
So
is
important.
also doing that. I'm your biggest fan, Liz and Chris.
Thank you.
And we love you. We love you.
Same here.
Thank you so much, guys, for this explanations and your time here.
Thank you.
Absolutely. And if any
us.
viewers out there have any questions about this, or just buying in general, or just selling in general, we can help with those things too.
Yes.
You don't have to sell and buy at the same time, but we're happy to answer any questions. I know that when we share this, we'll have our contact information and stuff too. So feel free to reach out to us, and we just want to help you guys through this process.
Awesome. Thank you.
Thank you very much.
Thanks,
Have a great
guys.
day.
Have a great one.